Wall Street's mixed feelings. U.S. unemployment looms large. The financial world is abuzz with the latest job market news. On December 16, Reuters reported that Wall Street experienced a mostly downward trend, with the Nasdaq being the lone exception. The dollar and Treasury yields took a hit as the U.S. unemployment rate climbed to 4.6% in November, the highest it's been in over 4 years. But here's the twist: while the Nasdaq defied the trend, the Nasdaq Composite Index rose by 0.5%. This divergence is intriguing, especially when considering the broader market sentiment. China's promise: a boost to domestic demand? In today's column, we delve into China's commitment to prioritize domestic demand in 2026. While the goal is commendable, investors are skeptical about Beijing's ability to deliver the necessary fiscal stimulus. Will China's economy grow by 5% next year, as the government targets, or will it be a different story? Global market snapshot. Stocks: a sea of red across Europe, minus 0.5%, China and Japan, minus 1% to minus 2%, except for the Nasdaq. Brazil's market also took a hit, minus 2%. Sectors as shares: only 3 U.S. sectors rose, led by tech, plus 0.3%. Energy and healthcare declined, minus 3% and minus 1.3%, respectively. Comcast and United Airlines saw gains, plus 5.4% and plus 4.4%, while iRobot plunged, minus 35%. FX: the dollar index hit an 11-week low, and the Brazilian real weakened, minus 1%. Bonds: U.S. Treasury yield slipped, and the yield curve approached its steepest in 4 years. Commodities: metals, oil prices sank to a near 5-year low, while platinum soared to a new high. U.S. job market: a softening trend? Tuesday's employment figures revealed a softening labor market, but interpreting these numbers is tricky due to the government shutdown, data collection issues, and immigration complexities. Fed policymakers are divided, with Doves advocating for further easing and Hawks urging caution due to data uncertainty. Traders are hesitant to fully price in another rate cut until June, but will this change if unemployment nears 5%? The auto industry's green dilemma. The US and European auto industries are facing a green dilemma. The European Commission proposed lifting the ban on new combustion engine cars from 2035, following pressure from car makers struggling to compete with Tesla and Chinese EV makers. Meanwhile, Ford's $19.5 billion write-down and EV model cuts were in response to the Trump administration's policies and declining EV demand. Who's benefiting from these shifts? China's auto industry. Ukraine peace talks. Markets take notice. After several false starts, a peace deal between Russia and Ukraine seems within reach. Investors are cautiously optimistic, as evidenced by the slump in European defense stocks on Tuesday. Oil prices tumbled, offering some disinflationary relief. But is this optimism warranted? China's economic conundrum: fiscal stimulus or bust? Chinese authorities pledged to prioritize domestic consumption in 2026, but skepticism abounds. Despite the government's targets, economists warn that the economy's growth may rely more on exports and trade surplus than domestic consumption. Beijing's commitment to existing support and incremental measures raises concerns about the sufficiency of fiscal easing. Beijing's dilemma: stimulus or wait and see? Beijing's hesitation to aggressively stimulate the economy is understandable, given the front-loaded stimulus this year. However, domestic consumption is deteriorating, with business investment and retail sales in November falling short of expectations. Economists warn of a potential deflationary spiral if bold stimulus measures aren't taken. With Chinese bond yields at record lows, borrowing to address this issue is an option. China's external strength, internal fragility. China's external performance is thriving, but its domestic economy faces challenges. The Sino-US trade war has impacted shipments to the US, but China has compensated by increasing exports to Europe, Australia, and Southeast Asia. The trade surplus exceeds $1 trillion, with manufactured goods surpluses estimated at $2 trillion. However, this external strength masks domestic fragility, as investment in strategic industries does little to boost domestic spending. The yuan's rise, a double-edged sword. The yuan's strength against the dollar provides Beijing with a defense against accusations of exchange rate manipulation. However, critics argue that the yuan remains undervalued given the trade surplus. As the domestic economy shows signs of weakness, Beijing's reluctance to implement bolder fiscal measures raises questions. Is the yuan's rise sustainable without addressing internal economic issues? Upcoming market movers. Japan's machinery orders and trade data for October and November, respectively. Interest rate decisions from Thailand and Indonesia. Germany's IFO Business Sentiment Index and Eurozone inflation for December and November. UK inflation for November. US Treasury's auction of 20-year bonds. Speeches by US Federal Reserve officials, including Governor Christopher Waller, New York Fed President John Williams, and Atlanta Fed President Raphael Bostic. Controversy Corner. Is Beijing's cautious approach to fiscal stimulus justified, or is it hindering the economy's growth potential? Share your thoughts in the comments below. Are China's external gains sustainable without addressing domestic challenges? Let's discuss.